How are we doing, team? Sorry about that. A couple of technical issues there. I'm on my own today. Diego is otherwise busy. I should have a special guest for us today, so I'm just waiting for them to join us, and hopefully we'll have them on in the next kind of 5 minutes or so. So what we're going to do, we're going to talk through today. We touched last week on, how to trade with a full-time job. We got obviously Diego's version of that and the methods that he would use. I'm going to share some of my methods today. How I would trade, or how I do trade with a full-time job, really, because I do still have a full-time position. So we're going to go through that today. I'm going to talk you through some trade scenarios from last week. Euro USD delivered fantastically last week. Let's get stuck into the charts. Go through that first and foremost. Hopefully we're going to have another big week this week. It really depends on what dollar wants to do ultimately. Me primarily, I trade Euro USD. I keep an eye on a couple of other charts, but I'm not really that focused on anything other than Euro USD. I think if you're a day trader, one of the best things I ever did for my trading was cutting down my pairs. I remember when I first started trading, more of a higher time frame trader back in the early days. I was trading kind of 26 pairs or up to, and doing a Sunday forecast. I was picking kind of 6 pairs for the week that I'll be watching, and it was just so noisy all the time. There was just so much there. So I cut that down to kind of 5 or 6 fixed pairs, and then from there I dropped down to 2 or 3, and now I dropped down to 1. So, it's pretty amazing the difference that it can make. I think we finally have our special guest with us as well, so I'm just going to bring him on. So, Alan, welcome. You made it. How you doing, brother? You good? Can you hear me? Hello?
Hey.
Can you hear me?
Yeah, I can hear you.
There we go. Amazing. How you doing? You good?
Yeah, I'm good.
Good man. Thanks for joining us. So, I was just talking to guys through.
I'm with you on my phone, by the way.
Oh, that's okay. Yeah, I was just talking to the guys what we're going to go through today. We're going to go through some trade recaps. We're going to spend a little bit of time with you as well, Alan. We're going to talk to you, find a little bit about you and your journey and things like that. So we'll do that in just a moment. We're going to do a little bit of forecasting whilst you get yourself set up and go from there. Hey, Zikrum, thanks for joining us. I hope I pronounced that correctly. Is it Zikrium? Zkrium? Or just Zgrim? I'm not sure. We shall see. We shall find out. Hopefully get a message. Guys, I want you to, as I am on my own, obviously we've got Alan here, but as we haven't got Diego to kind of bounce back and forth off today, it would be great if you guys can kind of comment, ask questions throughout. I'll keep an eye on the comments. I can see them down the right-hand side. So please make sure you are, jumping in. Hey, Joseph, how you doing? Jumping in and, asking questions throughout, and we can go from there. Going to open up a chart quickly, and then we can have a look at some trades from last week. There with me 2 moments. That's set up. Where are we? Okay, perfect. Okie dokie, so let's just share my screen. Let's talk through USD. Okay, so let's have a look what happened last week, because it was a really interesting week. We had absolutely loads in the marketplace. As you can see, this is the hourly time frame. We were really quite heavily bullish. We have been since 26th of June. So the smart trade at the moment is a buy trade. That being said, we have just hit this major liquidity level, this major kind of swing point. So this would be a significant area that we could expect some reversals from, okay? Now, the reason why we say expect is because nothing is guaranteed. And if we are to trade in line with momentum, then ultimately we want to make sure that we are following the recent price action, i.e., I'm not just going to be selling from here and hoping we get back down to that weekly level, okay? Because that was the start of last week. This was start of last week. No, the week before last. Apologies. So that was the start of the week before last. We've got a weekly level down there. Probably means, yeah, that's right. Okay, so we've got another weekly level down here as well. The reason why I didn't mark that one on, I'll be honest, I missed it, but the reason why I didn't mark that one is that the candle formation there's not really any wick on it. There's not really shown any rejection. This was just a real clear kind of push. So for now, I'm going to be assuming that we are going to continue bullish. So if I were to take any trade right now, I'd be taking it long. It's just as simple as that. I would be just taking it long. And if I want to take a short, I will wait for it to tell me very clearly that we're going short by performing some sort of structural move, which gives me a clear indication that we're going short. But until that happens, for me, I'm just going to be looking at buys, okay? So unfortunately, there wasn't a buy this morning. We didn't have either on the DXY or the Euro USD. We didn't have that classic kind of sweet raid on liquidity that we'd like to take ourselves short. Same here on Euro USD. We didn't get that same kind of push down, sweep the liquidity, then push up. So that's an important one to just keep an eye on, is that we need to make sure that we aren't just jumping into the markets unnecessarily. Like if there had been that liquidity move, I definitely would have taken it, but there wasn't, so I didn't. As simple as that. A couple of trades that we took last week. So there were a couple of shorts last week. I've wiped them off my charts now, but I think we took this one down here. We held down to, I think it wasn't a huge trade to be fair. I got out of it about 1.3, 1.2, something like that, or 1.5. I can't remember off the top of my head. And ideally, I wanted to hold down to that liquidity down left, but as you can see, we came back up and got taken out for break even there. And then from there, we had a kind of, we had our continuation of the bullish play. So we're expecting earlier part of the week to get this kind of accumulation in the marketplace. We then expect to get some sort of distribution, which is the market down here. Manipulation, which pushed the market down here. Again, we were really hoping that we got that manipulation and took out that low there, but it didn't. Okay, it doesn't have to do that. That to us just tells us how bullish this marketplace is. That was our distribution. And then we didn't really get the end of week reversal. We actually had the end of week reversal down here, which came into Monday. So it was a really, as you can see, really clear kind of bullish play last week. And it was just a case of jumping in. So we had, I think, a couple of trades. There was a trade here that we took, which we took out a couple of R out of over here. And then Friday was the big day where we got into the market here. This was kind of a picture perfect setup, riding up to that high. I think it took about 5R out of this one. I'll show you exactly how I got into it, and then we can kind of talk about a couple of other things. So this was a really simple setup. So we had this big bullish move from CPI, I think it was, on Thursday. Really big bullish move, kind of setting the tone for the marketplace. And then on here, we had Asia range swept along with previous days liquidity swept down here. Okay, we didn't quite get the full move down there, but once we saw that rejection here, I got in, I think, on the engulfing pattern, and we just jumped in like that. It was a really, really simple entry. There wasn't really any confirmation in this section. Ideally, we like to have that kind of push up, push down, that kind of structural formation, ideally, but we didn't get it. I was just so confident on these bullish plays that for me, it was just a case of jumping into the marketplace. And, ultimately, we pulled out of it about 5R, had a couple of additional entries up here as well. But, really, really fantastic bullish week. Didn't trade any of this day because of the news. The trade could have as easily come back down on me down here as it did push up. I know some of us got that big bullish buy there, but for me, I didn't actually take it. So that's kind of my week last week. We ended up doing about 8% last week, which was fantastic. Really, really happy with that. Twice my weekly target. So yeah, really fantastic week. For now, I'm looking at more buys on Euro USD. I wouldn't look to sell it in any way. But ultimately, we may get that kind of self-setup coming down like that with some structure, and then we could sell down into some of these lower prices. But the market really has to show me that more than anything else. I get a funded account to start my trading week. If only it was that simple, brother. If only it was that simple, it would be a great thing to give out trading accounts for free. But then there would be no business. Unfortunately, we need the business. Otherwise, we wouldn't be here doing this live stream. Simple as that. Anyway, Alan, you're back. Working. Oh, hang on, I'm going to unmute you. There we go.
Yeah.
How you doing? So, want to find out a little bit about you. So, I don't know Alan too well. I'm going to be completely honest with you all. Alan is a relatively new student of mine over in the Strong Money Forex mentorship. If you don't follow me already, I'd ask, please go and follow me on Instagram at Strong Money Forex. I'll see if I can put it in the chat.
Link in the description.
Forex. Yeah. That's the private chat. I'll put it in the public chat at Strong Money Forex. If you ever have any questions or queries or need me at all at any stage, you're always welcome to reach out to me and say hello on Instagram, and I'll always answer your questions and try and help you as much as I can. So Alan's relatively new boot camp yesterday, which is really, really cool. We spent kind of 3 hours together yesterday going through lots of the concepts that I teach, which is brilliant. And you're relatively new to your trading, aren't you?
Yeah.
How long have you been trading for now?
So if I was going to add up all the hours that I've traded, it's probably less than 50.
Really?
Okay. But it is spread over quite a few years.
Fine. And so what sort of trading have you done in the past?
Started with forex,
futures, crypto.
So I've done forex, and the only other thing I've done was crude oil.
Okay.
Yeah, I've never tried crypto.
A lot of people trade crude oil. I used to trade crude oil back in the day when I had like no understanding of what trading was really. I downloaded I think it was CMC Markets, and I downloaded their app, and I was just looking at these charts and these candlestick patterns. I had no clue what it meant, and I was just buying and selling. I was just like, I was classic kind of buying high and selling low, which we know is the wrong way around. And then I was like, right, okay, I've got to do this a little bit differently. And I tried a few strategies, kind of support resistance and things like that, and very quickly found out that it wasn't working particularly well. What brought you to trading in the first place? What was the reason you took the venture? Was there anything in particular that you saw online? Was there, I don't know, a particular social media person, like a YouTube page or something that you came across?
It started with a scam call that I got from someone with an Indian accent claiming to be offering a mentoring service with a trading company. Okay. What happened with that? It was a fake company. You could put the money in, and they can see your screen basically when you enter your card details to deposit the money. So then they had access to your card and all that.
No way.
Yeah.
You didn't fall for it, did you?
No, I did, because I was only 18 or 19 at the time.
What, did they take your money off you?
They took a few thousand, because I invested into this company to trade with, and then I couldn't take the money out. So
that's so bad.
Yeah, I know.
That's so bad.
I didn't know what I was doing.
What happened? Did you get your money back?
No. Well, I didn't really try much to get it back, but I don't know if I would be able to.
Often your credit card companies and companies like that can look after you with stuff like that. But still, either way. So that didn't put you off then?
No, because it's the weirdest thing. So even though it wasn't real money because I couldn't take it out, I was still doing trades on the live trading platforms. I was doing forex trades, and I actually did all right.
So you effectively deposited money with them, and then they still gave you almost like a demo account for you to trade from, did they?
Yeah, it looked like a normal trading platform. Yeah. It looked pretty attractive. The website looks like it was simple and easy to see what was happening and everything, and they had the flashing lights when it would go up and down. It would have a green light or a red light. So I was doing trades on a few different forex pairs. Yeah, and actually I had 25 green trades before I made my first loss, because I would stare at the screen. I only had $250 in at the start. I'd stare at the screen and I'd wait for it to go $2 in the green, and I would just take the money out. Yeah, and I'll be like, oh yes. But I would watch it for an hour before I got the $2. But the fact that
$2 an hour, it's not the best pay, is it?
but they all added up because I remember I was 6 days into it and I was $100 up from my $250. And then, so it's like beginner's luck, I guess.
Yeah.
Because then I ended up, I watched Ricky, not Ricky. I think it's Ricky, and then it was like a 23-year-old guy that was a fairly popular mentor.
Not sure.
24, and attractive looking guy. I bought his course for $250.
Yeah.
And then it's like the more I learnt, the more money I lost. At the start.
Yeah.
So then I would cut my losses almost every single trade, and I just ended up with a bunch of trades with losses.
Yeah.
And then
I do agree with you. I think there's a couple of things that happens there. I think when you start, you're really numb to the losses. Like you don't really care about them because you know that you're learning and you're training yourself up. So I feel like everybody goes through that when they start, that they feel like their results were the best they ever were. And the problem is that you were probably just lucky. You probably didn't really care about the money, so you took bigger risks. You probably, if you look back into those trades, there were moments where you were maybe massively in drawdown, but then you hugely overpositioned yourself and then you made all your money back. And so you're like, oh, this is easy, I'm making loads of money. But then when you start bringing in concepts like risk management and, supply and demand, support and resistance, and then you try and trade a strategy, it becomes almost 100 times more difficult because now you have knowledge around it, which means you care a little bit more about it, which means your responses to wins and losses are a little bit more emotional. So now when you lose, you feel worse about them. When you win, you feel better about them. And that winning feeling, it is almost like a drug, isn't it? You get that high. It's like the same as gamblers. You get that high of like, yes, I've just made some money. And then when you lose, you have that opposite impact. And so I think you then start just caring more. And I think we're also quite naive where we start, where we think that, if I have a strategy that's taught to me by a mentor is going to be successful and, is going to make me loads of money, why aren't I winning 70, 80, 90% of the time? Well, the fact of the matter is that a lot of good strategies, you don't win that often. Even some of the best strategies in the marketplace, you might only win 50, 60% of the time, but your risk management allows you to make that consistently profitable. So it's a really, really tough game. And the thing is that there's no shortcut to it either. I'm gonna pre-warn you now. There's no shortcut to it. I know we discussed about this yesterday that, realistically, it's going to take you, even with a good mentor guiding you, it's going to take you 6 months to a year to start it all making sense. It's going to take probably 18 months, 24 months, if not longer, to start making some real profit. And, realistically, before you're ready to quit your full-time job, it might be 3 or 4 years down the line, realistically. And this is why I think today's topic is really important, of how to trade alongside a full-time job, that we'll come back to. But, what you've experienced there is absolutely right. There are, everybody goes through that kind of high and that easy streak at the start, and then it becomes a little more complicated. How many strategies have you gone through and learned now then over your time?
Basically just support resistance.
Yeah.
And I heard briefly, but I never memorized them. Different patterns at the
wedges and flags.
Yeah, at the resistance level and the support level for when to buy and sell. But because I never memorized them, I never really focused on that.
No, yeah, fair.
Because I feel like the more you practice it and the more you watch the charts, the more you have this feeling. It's like a gut feeling that it's about to, it looks like a good trade, but you might not be able to explain it to someone else necessarily.
How often is that gut feeling right?
Well, I haven't actually traded recently, so I wouldn't know. But yesterday when we were looking at those trades, there was some that you saw that I didn't see, but there was one that you thought might have broken the level and gone further up. And I said, no, it doesn't look good to me. And it ended up going in reverse. It ended up dropping.
There we go. Yeah. I think, it's a numbers game, isn't it, at the end of the day? And it doesn't matter how experienced you are or how good your strategy is. You could flip a coin and you could take a one-to-one trade. You could flip a coin and buy and sell randomly. And if you go for like 1.1, I think there's a test done on this, that if you aim for like 1.2 or 1.3 or something, and then you flip a coin and you buy or sell, regardless of any other structure, that you can actually make some kind of money doing it that way, because your wins are 0.2 higher than your losses are. So I think all strategies, they have an opportunity to win and lose consistently. I think what's really, really important is that, what you said there is absolutely right. There'll be times where I take trades where your learning and understanding contradicts my trade, and that's okay. It's a really important skill to actually develop, to have your own bias and your own technical analysis and trust your own strategy, because that's how you learn. We've got a few people in the group very recently that have said, I was thinking price would go this way, but I saw you go that way, so I cancelled my trade, or I followed your trade and then it lost. You never learn from doing that. It's the reason why signal services don't work, because there's no learning, there's no understanding there. What you have to do is you have to lose. You have to lose to learn from those losses. Now, I know my strategy works 50-60% of the time if I'm going for 2 to 3R. I'm really, really comfortable with that, but that's my strategy. And whilst I can try and teach the theory of the strategy, as we saw yesterday, there's so many moving parts, isn't there, that you need to build your own. Effectively, you've got to build your own strategy out of it. For example, a lot of my trading, I will trade the New York session. You can't do that because it's 3 a.m. for you?
Yeah, probably.
At 1:30 p.m. UK time, you're 9 hours behind. Yeah, it's about 3 a.m.
I'm in front.
Oh, ahead. Yes. So yes. I think that works. Anyway, it basically is very late. It's very late. So you have to build a strategy really that's primarily built around the London Open session. So it's really important, and this goes for everyone, people in the comments, and anyone that we speak to on the social media channels. It's really, really important to make sure you build your own strategy and then test your own strategy and then go from there. Because where I win, you might lose, and when you win, I might lose, and that's just the way it goes. So what's the big goal for you? And whilst Alan's talking, guys, those of you in the comments, anyone got any comments for Alan as a new trader? Anyone got some advice for Alan as a newer trader? For you, Alan, what's your kind of focus? What's the reason that you got into trading, and you're here today?
I work for myself in what I do. I do roof restoration, so I have the freedom. I have the freedom to work when I want to work and not work when I don't want to work.
Cool.
And I love that freedom. So
yeah.
But I think this is the type of job that you can do for a certain period of time, and then you get a sore back and you get sick of the job.
Yeah.
So yeah.
How many years have you been doing roof restoration for?
7 years.
7 years. Amazing. And you got your own business?
Yeah.
That's pretty cool. Were you working for a company before that?
I was working for my uncle's company, actually.
Yeah. And then you kind of set up on your own.
Basically, yeah.
How did he take that?
No, he knew. He knew. I could tell, when we would talk about me working for him in the future, like I could tell that he knew I'd only be around for a certain period of time.
Yeah, fair.
I think because he's been doing roofing for 30 years.
Okay.
And he's had many people come and go, so He knows the story basically.
And what are you planning to do then with your trading? Do you have any big goals? Is there a kind of like a 5-year plan? Do you want to buy yourself, I don't know, a supercar, a house? What is the plan? What do you want all this money for? Because let's say in 2 years' time, you're bringing in more money than you've ever done before. What do you want to do with it? What's the reason why you're trading?
I don't have to do roofing.
Don't have to do roofing. Fair enough.
Yeah.
No big goals, no big aspirations.
Well, no. I try not to have big goals because, like, often big goals are unrealistic, and then you just get let down when you don't get it.
Yeah. Fair.
But I have some things that I want to do, like eventually I want to buy my own house and that kind of thing.
Nice.
Like anyone.
Yeah,
know?
nice. I like that.
Yeah.
That's a good one to have. Definitely. It's a good one to have.
Yeah.
So what we're going to do now, we're going to go through, I'm going to talk through, I'm going to actually jump back onto the charts and kind of show you guys, everyone, how to trade alongside a full-time job. Those of you in the comments, if you have any pairs that you'd like me to look at, because I'm going to do a little bit of forecasting at the end of the session. If you've got any pairs that you'd like me to forecast, then please put them in the comments, and we can have a look at those as we are going through it. Alan, appreciate your time. Thank you. You're obviously welcome to stay on, and you can kind of ask questions throughout as well. I'm looking forward to seeing your journey. I think it's going to be, a really, really good year for you, or end of year for you. Where do you want to be with your trading in, say, 12 months' time? Where would you expect to be?
I expect to have 10K account that I'm trading with.
Nice. And I would highly recommend the CTI funded accounts as well. City Traders Imperium. I'm not sure if you know too much about them, but I've gone through countless prop firms over the years. They are dropping like flies at the moment. The funded engineer, I think, was the most recent one. I think they fell either this morning or last night. City Traders have been in the marketplace. This is they haven't asked me to say this. I genuinely believe this. City Traders have been in the marketplace now since, I think, 2018, if my numbers are correct. Someone in the comments might need to correct me. But 2018, they've been in the marketplace for a long, long time, which, it says a lot. That's the first thing. Most of these companies that are falling now, and the ones that give these ridiculous promotional, offers, they've been in the marketplace less than 12 months. And I would always recommend, if you're picking a prop firm, to pick a prop firm that's been in the marketplace for 3 years or more. That's kind of my go-to normally. There's obviously a couple of the bigger names that I'm sure we're all aware of that we mentioned on here, but the City Traders have been, I've known a few of the guys who work within them. What they do, which is really, really good, is they make sure that the products are stable. Okay, so there's not ridiculous offers. You're not going to find probably the cheapest prices with City Traders Imperium, but what they do is they offer really reasonable rates, and they offer really fantastic rules. Their rules try to get you funded, whereas other companies' rules try to make you fail. It's no secret, prop firms are primarily funded off the losses of failed traders. That being said, City Traders Imperium, they really want you to get funded. They've got really good scaling plans and things like that. So I would definitely recommend that you check them out. And I've got a discount code if you want it as well. But 10K funded, I think, within 12 months' time, I think would be a really, really good goal. I reckon we can do it probably in 6 months. I reckon I can help you get it in 6 months.
Yeah.
Yeah, I reckon I can. That's my challenge now. All right.
Do I need to do a lot for that?
Say again?
How do I qualify?
How do you qualify?
Yeah.
I mean,
for a prop firm with CT?
So it depends on what you've got. So there's 2 different prop firm challenges that you can do with CTI, the ones that I use anyway. So you've got 1-step funding or 2-step funding. So the 1-step funding, you just need to make 10%. Okay, you've got an unlimited amount of time. There's only one drawdown. It's a total drawdown of 6%, and it's 6% from your original balance, I believe, rather than your kind of rolling balance. So a lot of them, and these are the kind of the nuances that you need to really watch out for. So a lot of the prop firms, what they'll do is they'll give you like I can't remember what it's called. I think it's called a rolling balance, something like that. So you're on a 10K account, okay? You make yourself $500. You've now made 5% on that account, right? Yeah. With CTI, if you lose 5%, you go back down to the original balance, you've still got another 6% below that you can go down into. So you've got like a relative drawdown, it's called relative drawdown, and I can't remember what this one's called, but it's called something different. So the drawdown, you could go, if you go 5% up, you've effectively got 11% of drawdown that you can play around with before you lose the account. And the 1-step funding, whilst they're a bit more expensive, they don't actually require you to have they don't actually have a daily drawdown either. So, you could effectively go 10% down in one day in that same scenario, and you still ultimately keep your account, which is pretty cool. They also have a 2-step funding. I don't use these as much, but I know they're very good. The 2-step funding, ultimately, they give you 2 challenge phases. I'm assuming it's probably 10% and 5%. You can do a quick Google search and find it, but that's how most of them work. It might be 12% on the first phase. So what you do is you pay for the account ultimately. You then get an account that you can trade with, and then you have to work within the confines. Be prepared that you're probably going to fail a few initially. That's really, really common. I dread to think how many prop firm challenges I've failed over the years. Maybe 30, genuinely, maybe 30, maybe as many as that. But then what you do is once you pass the challenge effectively, so you do either your 2-step funded or your 1-step funded. Once you've passed it, you then get given an account that you can trade off, and then you get a profit split once every 2 weeks, once every 4 weeks, depending on the account. You get a profit split then, 70, 80%, whatever it may be, depending on the product. They all vary. So that's kind of loosely how it works. It's just a case of you buy one, they give you an account, you then go and trade it. But what I'd suggest for anyone looking to do this is make sure you've got a good kind of 6 to 12 months of consistent profitability under your belt. Okay, that's really what you want to see. You want to be really, really confident in that, because as soon as you go live on these challenge accounts, it's like your brain goes mental. The stresses and the frustrations and all the other bits and bobs, they really kind of come in and they get you. So you need to be really, really confident and really, really ready with your strategy before you take a prop firm challenge. There's various ones out there that you can do that do like trials, which simulate them. But yeah, when you're ready to go, CTI is where to go. I'd highly recommend it.
Okay. Thanks for that.
Right. You're welcome. So we're going to jump back onto the charts now. I'm just going to jump over and share my screen. Just bear with 2 moments. Right. Can you see my screen? I'm assuming you can. All good?
It's loading. Yeah, I see it.
Yeah. Perfect. Okay. So we're going to talk through today how we trade with a full-time job. Okay. The first thing that I would recommend any of you do is, and I'm going to assume that most of us work a classic 9-to-5 job. Okay. And I'm also going to assume that most of us are on a kind of European time frame. I will try and address it differently for other time frames, but let's just start from a kind of UK Europe time frame basis. So the first thing that I would do is when the market is here, when the market is here, so the first thing you've got to do is you've got to get up earlier, probably. Okay, I'm going to say the market, I've got up here at 6 o'clock. So I'm going to go into the marketplace at 6 o'clock and I'm going to have a look at my key areas and I'm going to basically do some forecasting. So I'm going to start my daily time frame and have a look at what we've got here. So let's do 4 hour because the daily's already, unfortunately, the daily prints the candle because we're in that candle, so we can already see it. So let's use the 4 hour. So I'm looking at this 4 hour section. I'm like, right, okay, we're heavily bullish. I don't really see any rejection. What I am, however, seeing is I'm seeing this big gap. Okay, this big gap which was caused. We spoke about that yesterday, Alan, if you remember. We spoke about the gap that's probably going to be caused. This often happens on Monday, especially recently. I was expecting with the Donald Trump assassination attempt, I was expecting that gap to be a lot bigger, if I'm honest. So that's one of those things. The market does random things at the best of times. So that's kind of a big gap. Now, for me, I'm looking at this thinking, do you know what? This for me only looks like a buy. We're really heavily bullish. We haven't taken out that major liquidity, which is that level there. Okay. We have taken out a liquidity point here, which is definitely relevant. Okay. We definitely want to have a look at that. That's what I would class as range liquidity. It's the last high before the external high. So definitely worth considering that. But that isn't bearish structure. Why isn't that bearish structure? Can anyone tell me? Anyone in the comments or Alan, why isn't that bearish structure? Anyone in the comments can indicate to me why that isn't bearish structure just yet? Alan, can you tell me why that isn't bearish structure just yet? What is it about that kind of formation or that section of price that we wouldn't class as bearish structure yet?
Are you looking right on the end of the time scale?
Yeah, I'm looking at this little bit here. So why would I not want to sell there?
Because it's a big jump and it could just be temporary.
Yeah, there is that. So if we look at kind of classic market structure, okay, structure right now, if I just draw on some structural points, so I'm going to go low, high, okay. What do we have there? Again, guys in the comments, please jump in and put your suggestions in there as well. I'm sure somebody watching, there's 63 of you watching right now, will have the right answer. What are we looking at right now? Is it a bullish or is it a bearish market?
It's a bullish.
Bullish, exactly. And what do we need? It has, so Joseph jumped in. It has not broken the low that made last high. Yeah, exactly that. Okay. So what it's not done is it's not done this yet. Okay. So for us on this time frame, which is probably the hourly, probably to clean on the hourly, or yeah, 30-minute hourly. Okay. So on this time frame, just this little section of price, we are not bearish yet. Okay. And therefore we cannot really trust the bearish setups until that low is broken. Okay. And that's just classic kind of market structure analysis. Okay. Now I don't particularly trade market structure in its purest form. I trade liquidity, but for me looking at this, I'm not focused on sells until we get a really clear sell indication. And then even when I jump down to the 15-minute time frame, if I use my 15-minute structure, so low, high, low, high, low, again, the exact same thing. Nothing in there indicates to me that this is a safe buy, especially when we have this major level up here. Okay. So for me, what I'm looking at is this is now a bullish marketplace. And this is the first thing that I'm going to be doing when I jump on the charts at 6 in the morning, is I'm going to be looking at where price is likely to go. Now, if I want to take a buy from here, and I'm saying that this is my range, what I need in order to take that buy, sorry, apologies, that's my range. What I need in order for me to take that buy is I need something clear and obvious to get me into the trade. Now, for me, it'd be a sweep of the Asia low. That's my classic kind of go-to setup. So what I'm going to do is I'm going to look at this. I'm going to just, in my own head, I'm just going to draw on some like forecasting. That would be my setup for the day. I probably wouldn't put the trade tool on, but I would kind of have a look what we've got. Yeah, we've got 3.8 up to there. So that's good enough for me to get into that trade. You know, anywhere between 4 to 6, or you know, it's just shy of 4. Appreciate that, but anywhere between 4 to 6, you know, I'm pretty happy to take a trade. So I know that if the marketplace comes down and sweeps that low out, we have got a really clear setup to go long. Okay. Obviously, it's not just the sweep. I'm not just going to be waiting for it to sweep and I'm going to be buying straight away. That would be madness. And then waiting for some sort of structural move, one of my classic kind of entry models, to get myself into that. So what I'm then doing is I'm setting an alert there. Okay. So I'm setting an alert there. That's my first alert. And then I'm setting another alert at the top, because if we don't create any structure, but we do just push up to here, the next place I want to see where we're going to be doing anything from, in inverted commas, is last week's weekly high. Okay. So again, if I go to the weekly time frame, okay, we've got last week's weekly high, which is there. Okay. I'm just going to go back to my 15-minute. Okay. So the next thing that I want to be doing is I'm going to be setting an alert here, as you can see, because that's my weekly level. Okay, now I know now that that weekly level has been swept, okay, because we know that because price has happened. But what I'm going to be doing is setting alerts both above and below my price, and those are my areas of interest. So once I've done that, I can now walk away from the charts. I can walk away from the charts. Good morning, boss lady. I can walk away from the charts. I can now be confident in the fact that when my alerts trigger, I'm going to get a notification on my phone, and I'm just going to go about my day like normal. What's great about this and this kind of approach, as long as you do the analysis before your day, and just to sidetrack a little bit, one of the most impactive, what am I trying to say? One of the things that impacts my trading most is not doing this morning analysis. Okay, because what then happens is price comes down to here and I think, oh, right, so yeah, we've got some big impulsive candles now. You know, I'm sat on my phone, I'm at my desk at work, or maybe I'm taking a quick break at work. I can't see the full market. I'm not able to do multi-time frame analysis. So what I do then is I'm like, right, I don't want to miss out on this sell. I haven't done any analysis this morning, but still, I don't want to miss out on this sell. And this is probably going to take out the range low. So brilliant, I'll do that. And then I get stopped out. Okay. So it's really important to do that analysis before you start work. So if you live in Europe and you work a classic 9-to-5 job, then this will apply to you. Do your morning analysis, plan where you would trade from, talk with yourself, put it in your journal, whatever it may be, discuss with yourself what trade you will be taking and why, and then set alerts on those trades. And then when those alerts get triggered, then you can come back to the marketplace. Now, it might just be that the market just does this all day. You don't want to trade that, right? So what you can do is you set your alerts. You then don't have to look at the marketplace at all that day because your alerts haven't been hit. And that stops you from taking bad trades. Most strategies, if traders know their strategies well, most strategies work. As long as it's not absolute garbage, as long as there's beating testing in it, most strategies work. What often causes traders to fail is making mistakes or taking average trades. I think most of you, if you have a good strategy and you follow it religiously, you'll probably be profitable. If you don't do that and you take average trades more consistently, then you'll probably lose money. So this is a really good hack, okay? Alert set below where you want to see next, alert set above where you want to see next. And when those market orders get triggered, you can then have a look at it. So for me, for example, looking at this one here, we might have actually missed a trade today. So we've taken out last week's weekly high, we've taken out that major point, and we've started breaking down. So for me now, I can be looking at that, right? Now I'm going to jump down to the 3-minute time frame. Do I get my setup? So what I'm looking for is I'm looking for some sort of manipulation. I'm looking for a high to be swept of some kind, okay, which we get there. And so for me now, what I'd be looking at doing is I'd be looking at taking a trade off this manipulation. So that's what I call the manipulation setup. We've cleared out that liquidity. We've created a change of character, breaker structure, whatever you want to call it. I do understand that this could be a trap, okay? But for me, I'm happy to get into that trade. I put my stop above there, 7 pip stop. I want to get out of it around 2R. I can do that way before I get there, so I'm happy with that trade. So for me now, I can just play that out and see where we get to. So I would be then ultimately looking at that. That would be my trade for the day. Have I actually missed a decent trade here? I think I have as well, to be fair. So that would be my trade for the day, and then I'm good to go. And all I've done is I've just had to come back to the marketplace to check it a couple of times. The difficult thing that you may find when you're trading with a full-time job is having to come back and forwards to the marketplace. So your alert gets triggered here at 10:36 a.m. You don't get a setup till 12:08. So that's something that can be difficult. You will have to find a way around that if you want to trade, because if you're a day trader, then that's what you have to do. The only other thing that you can do is you can trade the hourly time frames and just check your phone, or your the same process applies. You do your analysis in the morning, but you can check the hourly time frames. Or if you really cannot check your phone throughout the day or check the charts throughout the day, you're going to have to learn how to swing trade. It's not the best market conditions for swing trading. I'll be perfectly honest with you guys. A lot of people that I know that swing trade struggle at the moment. But you can see, that you get a setup here, you get your false move, then you get your real move. You could have entered into something like that, held up to 2R. The problem with that is you're getting that. So that's 28th of December. You're not getting that to the 13th of February. So personally, I'm a day trader, so I can only really talk from day trading experience, but that's kind of how I would be looking at the marketplace, how I'd be trading with a full-time job. Now, for you, Alan, it's a little bit different, right?
Yeah. You could be looking at a sell right now for Euro USD. It's dropping right now.
Yeah, I think so. I'm a little bit late to get into this one, unfortunately, but I'll leave it on there and we can see how it plays out. Might do a bit of analysis on that later. For me, the reason why I wasn't really looking at that is I don't really look at trades in this middle section. So this kind of between like 11 and 12 o'clock UK time, I don't really look for trades. That was a pretty clean one. I wouldn't look for trades there. I also don't really like to trade Mondays either. So for me, that wouldn't have been a trade I would have taken even if I was on the charts. Even though everything's there, I've got to just follow my rules. My rules are I don't trade between 11 and 12. So unfortunately, that's just a miss for me. We might be lucky. You might get a bit of a pullback somewhere up here, but you are right. It looks like it will probably go to target and possibly could even come down to take out those levels that we created earlier today. We've got liquidity sat underneath there. That's definitely an area that price is probably going to be looking at, especially as we're looking for, if we're looking for higher prices, it's very likely that the market will do this initially and then it will do higher prices for the rest of the week. So Monday, Tuesday will be pushing down, Wednesday, Thursday, Friday pushing up. That's if we are to have a bullish week. That is what I would expect anyway. Now for you, Alan, I'm sorry, I'll come back to you, Alan, in just a moment. But if you're in America and you trade with a full-time job, I know a couple of my traders, they will wake up at 3 a.m. to look for trades. That to me is absolutely mental, but it's definitely something that it can be done if you want to catch the London session, which for day traders is particularly good. The other thing that you can do is you can just trade New York. I've spoken about this on this webinar before. New York will often provide us with some sort of trap. I'll go back and I'll show you. So what we're looking for is we're looking for the first section of price that leaves behind an imbalance. Okay, so this one actually has a double trap. Okay, see the little imbalances in there. So you've got an imbalance there and you've got an imbalance there. Okay, for those of you who don't know what an imbalance is, message me on Instagram at Strong Money Forex and I can talk you through what an imbalance is. Okay, these imbalances, when they're really, really clear, what happens is it creates a false move that gets trapped and swept out. Now, if you go back over the charts and you look back over previous price action, you'll see that these traps are created almost every single day, and they can get you into sometimes some really good trades. We had a news trap on this one as well, so that whole area was the trap. For me, I took a buy from here off that wick rejection, and I held it until we cleared out the trap. So if you're a New York trader or stateside and you have only access to the American session or the New York session, then I would be trading trap entries. You're waiting for a false move, you're taking a buy in line with market direction, and then that trap gets taken out. You will find that the trap gets taken out almost every day, unless there's a big news event like this, when it obviously it hasn't been. And I would hold these traps on the charts for 24 hours. Once 24 hours goes past, so if we go back to the next day's trap, so that's the next day's trap. Once 24 hours goes past, that is now deleted off my charts. Don't care about it, it's gone. I'm not fussed about that trap being blown again. But again, if you go through the markets, you're just looking for the first section of price that leaves behind imbalance, which is that one there. Okay, imbalance, small imbalance is pretty tiny, you can see it, but it's there. Small imbalance left behind, okay, creates a false move, tricking people into selling, and then they buy straight through it. They're not all created equal. Some are rubbish. I'll be honest with you. Some are rubbish. Some of them are really, really good. This one's a really, really good one. So false move, pushing down, okay, and then we take out that trap, and it happens over and over again. So I'd highly recommend, if you're stateside, exact same process that we spoke about earlier today. Do your analysis when you get up. That's probably like 7, 8 o'clock in the morning for you, which is going to be at 12 o'clock. Literally coming into the New York session. Yeah, I think that's right. Yeah, coming into the New York session. So that's what you can do. Now, if you are over on the east side of the planet, so Australia and surrounding areas, you are pretty lucky, aren't you, Alan?
Yeah.
Because you get London session when you finish work, if you work a normal job. So that's like 5 o'clock for you. London session opens, right?
Yeah.
And then what time does New York open? So what would be 12:30 p.m. UK time for you?
I've just looked up. It says local time 8 o'clock. So they open 8 a.m. in New York, right?
Yeah.
So
it's about 1 o'clock here. So if you're 9 hours ahead, we're talking about 9-10 p.m. So you're actually pretty perfect for trading, because you can get into a trade in the London session about 5-6 p.m. and then
it says 11 to 3.
Yeah, that's right. Yeah, so 11 to 3. No, it can't be 9 hours then. Anyway,
Australian Eastern Standard Time.
No, I don't know. Anyway, I mean, if it's 1 o'clock my time and you're 9 hours ahead, then it's 10 p.m., isn't it? So that's when I'd be looking for trades anyway, based upon the market conditions. So for you, it works really, really perfectly. We spoke about this yesterday. I would love to get out to Australia, because you could work full time and trade full time without them really crossing over each other, which is amazing. So I would do the exact same thing. I would look to get to my markets about 4 or 5 p.m. I would do my morning analysis, or for you, my afternoon analysis. And then I'd be looking out for trades and trying to find trades. For you, this is like, so 5 a.m. this time will be 5, 6, 7, 8, 9, 10, 12, 1, 2. 2 p.m. in the afternoon. So you're getting into the marketplace 8, 9, 10, 11, 12, 1, 2, 3, 4, 5. Yeah. So about 5 p.m. So 4 p.m., 5 p.m., you could just literally be getting into trades like this. it couldn't be better set up for you, really. It's really, really good. So I think we'll leave the session with that, really. I think if you are looking to work full time and trade at the same time, you need to move to Australia. That's what we've established, isn't it?
Basically, yeah.
Basically, be nice. Can you get me in now? We're friends. Can you get me into the country?
Yeah, but we gotta get the partnership visa.
Oh, we'd have to get married.
Yeah, that's the only way I can help you out.
I don't think my girlfriend's going to like that very much.
Yeah. Otherwise, I don't know how else I could help you. I don't know any government officials or anything like that.
Right. Maybe one day. So yeah, look, in summary, guys, if you're looking to trade with a full-time job, the most important thing is just preparing yourself for the markets. Getting into the markets when you've got access to a computer. I cannot recommend highly enough that you need to do that, okay? I've fallen foul to this so many times, trading just solely off my phone. Now, when I post charts in my group or on Instagram or on CTI's Discord, I will post them from my phone. But just trust me, I've done my analysis in the morning. I know exactly what I'm looking for. I know exactly what to expect. And I'm only taking those trades that I've planned for. I will not take any trade that I haven't planned most of the time. We're all human. We all make mistakes from time to time. But I am just really, really strict with that rule that if I'm taking a trade, it's because I've effectively forecasted it. Those forecasted trades that I've taken, I know are most likely to play out because I've factored in 5 or 6 different confluences that I'm not able to factor in when I'm just sat on my phone. And it's as simple as that, okay? Once you've done that forecast, you will have a high level and a low level, but when that is taken, you need to be looking back at the marketplace. Unless the market is ready to be taken on a trade right there and then, you will need to have alerts set. Okay, now that is going to mean that you're going to need to pay $15 a month or whatever it is for TradingView Pro, okay? Because I think you only get 1 or 2 alerts on the free TradingView. I see this quite a lot. People go, yeah, but I don't want to spend $15 a month on TradingView. It's really expensive. Trust me, if you can't afford $15 a month on TradingView, you're never going to make it in trading. Okay, you need education, and yes, there's a lot of information on YouTube, and that's great. And you can I could probably go onto YouTube now and piece together a really good strategy, but most good strategies aren't free. It's as simple as that, because whoever's built that strategy has spent years and years and years mastering that art, and they're very unlikely to give it out for free. The only real option you've got for that, I would say, is ICT, but you've got to commit a year to 2 years for that kind of education. It's effective. It's a very good trading strategy. I use bits of it in my own mentorship, but you're going to take a year to 2 years to get just through the videos before you can actually probably start trading it really, really confidently. So TradingView Pro is a must. If you feel like it's expensive, then you need to find another income stream to pay for your trading, because you're going to need things. You're going to need backtesting tools. You're going to need things like TradingView Pro. You're going to need things like prop firm challenges, and you're going to fail them over and over again. So you need a little bit of money. And if you haven't, look, I appreciate everyone comes into this because they want to make more money. So you might not have a huge amount of money. But if you don't have a huge amount of money, start putting what you have away. $10 a month, $20 a month, whatever it is, $30 a month, $50 a month. Start putting it away and saving. It's like a lot of people get frustrated that there's a cost to trading Forex, but it's like going into a business and say, I'm going to set up a business today and it's going to be a multi-million-dollar business, but I don't want to put any money into it. Or maybe I can just start with $5 a month and in a year I'll have $100,000. Just be sensible with it. This is a career, and this career is going to take investment. Okay, so TradingView Pro is going to be really, really important, so you can set your high and low alerts, and then you need your alert set up on your phone. Okay, if you have the luxury that you can check your trades at work, then that's great, because you can go to TradingView and everything is good. Whether or not you can install MT4 on your work computer is another question. So what you need to do is probably have TradingView on your phone so you can check your analysis. your MT4, MT5 setup on your phone so you can place trades. The other thing I'd highly recommend as well is that you set yourself up like a trading calculator tool. So there's a trading calculator tool called FX Calculators. I'll show you if I can load the screen. I'll show you what it looks like. It's a purple one. It's really, really good. It allows you, I don't know if you can see that. It looks like that, basically. It allows you to be able to set up your trade position sizes from your phone. So for me, I do my analysis on the computer, and then from there, what I'll do is I will take my trades from my phone and I'll use my MT4 and things like that. So that's kind of what I'm doing, how I'm setting it up, and that's kind of how I trade. That's how I've traded for the last 4 or 5 years, really. I just that's kind of been my daily process. When you finish work, you need to go home, you need to fill out your journal, you need to analyze your day, you need to write down any mistakes that you made, you need to write down any wins or any learning processes that you've made. Really important. Something that I've neglected lately is my journaling, and funny enough, one of the things I sat down to do today was to do some journaling from last week, and it's really interesting how you can really kind of psychoanalyze yourself and the mistakes that you've made. And I think just that process of going, I took this stupid trade and I should never have taken this stupid trade because it was a stupid decision. I think sometimes just that acknowledgement that I've made this mistake and I shouldn't make this mistake again is really, really important. So, I think sometimes putting pen to paper or typing out those words, acknowledging the mistake, can make a big difference to your results going forward and making sure you don't make those mistakes. So that's kind of my how-to guide on how to trade with a full-time job. Morning analysis, either at home, but definitely on a desktop. And once you've done that morning analysis, then coming back to your charts when an alert goes off, and just going from there. And that will keep you away from the charts where you don't need to be. One of the biggest mistakes that traders make is they spend too long on the chart and then they start trading on emotion because they feel like the market might do something, or it seems like this is logical. That's stupid. Okay, the market doesn't have feelings or emotions. You need hard facts to take a trade. You need confluent factors. You need the market to clearly show you why it's going to go in that direction, like we have on this trade here. We had a sweep of major liquidity. We had a clear break of structure. We got loads of imbalances left behind. I'm acknowledging that we could still make this move, and then we get my even better setup down there. But ultimately, for me, that would have been a trade that, if it was at the right time, would have been a really, really good trade to take. And there's multiple reasons for me to take this trade rather than just jumping in there and hoping for the best, right?
Is it MetaTrader 4 or MetaTrader 5? There's two of them that pop up.
It depends on your broker. So MT4 is the old one. MT5, most of them use an MT5 now. So I'd probably start with MT5. If you're looking to get a demo account, there's prop firms that do demo trials. Also, Awanda, you can get a demo account for. IC Markets, you can get a demo account for. You can start playing around with it. I am Boss Lady. I'm just going to read your comments. So besides TradingView, I have a journaling and backtesting software as well. It's really important. Which one do you use? Do you use MTJ or are you using FX Replay? I'd be interested to know. Also, you don't want to use your work computer for trading, especially when it comes down to productivity. I have a total separate system for work with 3 screens and work at times where you have a lot of screens. I usually have for my trading. One I usually have for my trading if and when I need to check the chart. Very important to set alerts that help me help me while working when to enter a trade. Set alerts on my partial stop loss. Yeah, and do you know what? You are absolutely right. So kind of to add to what we were discussing. So you're right. So once I've taken a trade, for me, what I do is I place a alert on my stop. So I have an alert like that, and I'll literally change its value to stop. Okay, so an alert will come up on my phone, stop. I go to the bathroom once that happens, and I cry for about 3 hours, and then I come back to the marketplaces. Obviously not. You hit your stop, it just is what it is. And I would then have an alert set for when I want to tighten my stop as well. So I've got my first profit target, which will be down here, say at 2R. I set a ray line for that. Once I've surpassed that, once I've got a new break of structure, which is like there, okay, what I'll then do is I'll set another alert on that. And for me, that will be Titan. And then what that teaches me to do then is go, right, okay, so I've surpassed that now, so I'm just going to take a little tight entry down. I'm just going to tighten my entry up. I wouldn't personally go straight to I wouldn't personally go straight to break even there because we could still come back up, but I'm going to take some profit off the marketplace and go from there, really. So that's kind of, yeah, you are absolutely right. From there, what we like to do is we like to tighten stops, set alerts for stops. And then once that's happened, I then just put my final alert here. Okay, that would be, so I'd call it winner. I put a nice little emoji, which has that little gold medal like that. Okay, and BE. Okay, so when that gets to there, what I'm going to be doing is I'm going to be tightening like the rest of my position to break even, and then I'm going to be taking off like 60, 70, 80%, depending on how I feel the momentum is. If I can see lots of imbalances in the marketplace and it moving really fast towards this, then ultimately I would leave maybe 50% on. If like this, though, it's corrective, and as we know, we're on Monday at the moment, so we're more likely to have corrective price action, then I would probably take 80% off if in that trade, if I was in it. That's it. MTJ. Yeah, so MTJ. So yeah, I've seen MTJ come quite a lot. So I use FX Replay. I like FX Replay, but it doesn't have the journaling software. Tell you what to do, boss lady. I'd like to talk to you about that a little bit more. Reach out to me on Instagram at forex. Just pop me a message because I like to talk to you about the journaling software. I'm really interested in how it works, actually. So pop me a message at forex on Instagram. It'd be great to have a chat. Anyway, we are out of time for today. Alan, thank you so much for joining us today. It's been a real pleasure. It's been lovely to have a guest on as well. Really, really appreciate you coming on and giving us your time. I know you're a busy guy, but yeah, great. And I'm really excited for your journey as well. I'm really excited to see what we can do together, what work we can do together. I know we went through a lot of information yesterday. I fully overloaded you.
You could say that, yeah.
But it's good stuff though, right? You learned a lot, yeah?
Good stuff, yeah. Good. I have to practice them now so that I don't forget.
Yesterday was the easy bit. Now it's a case of you now got to go to work for the rest of your life.
That's it.
So you thought you were going to get out of doing work, but actually Forex is probably one of the most demanding things. The thing is, it's more flexible. That's it, isn't it? You can set your trade. You can do your trade at like 5 p.m. your time, set your trade, and then you can go about your evening, and then you're kind of free, aren't you?
Well, yeah, the aim is to do it so that you only think about it in the time that you're actually doing it.
Yeah,
you're not
absolutely
thinking about it all day.
Absolutely. So yeah, look,
if you can set it up like that, that would be ideal.
That's it. Again, thank you for joining us. It's been an absolute pleasure having you on. It's been really lovely to have a guest on here. And I'll speak to you in the week, I'm sure.
Sounds good.
Cheers. Thanks, guys. See you later. Thanks for everyone watching. And thanks for those of you in the comments as well. Really, really appreciate it. And those of you who are watching and are too scared to comment, make sure next week put some comments in, ask questions. It's really great when you guys ask questions and talk to us, because then we can interact with you as well. So thank you for those of you who joined. Really appreciate you coming on. And yeah, I'll see you next week. Cheers.